Hey guys, Mod 130, BOA 2. We're going to talk today about accounting equation. This is extra little work that a little practice that I created for you. This module, or this week, we're talking about accounting. And although the textbook just kind of like flies right over it, I want you to understand the accounting equation. So we're going to learn more about that when we take accounting as a module. If you already went through that module, then this will be familiar to you. We'll fly right through this. This is not required, but those of you who really want to learn, we'll do it. This is for your benefit, for your learning, to enhance your educational program. Okay? So on the website, carolsclass.com, are two documents that you go ahead and print up. The first one, document 1, it's under week 4, by the way, is the accounting basics. And this is just basically information. It talks about what an asset, a liability, and what owner's equity is. An asset are resources owned by a business. Asset could be cash. Can be cash. We talked a little bit about that yesterday. It could be land and the building that is owned. It could be your inventory. Perhaps you're a store and you have inventory that you're going to sell. It could be equipment and supplies. Maybe you have a what do you call it? Forklift, part of your equipment, or you have a refrigerator. And importantly, and a lot of people don't quite understand this one, but your accounts receivable. I'm going to just do AR as an abbreviation. Accounts receivable is money that is owed to the company. So for instance, let's say I'm a medical company or a medical doctor and I provided services for my patients. And I sent the billing out, and that billing is money that is owed to the practice. So let's say, for instance, out of all the billing was $10,000 worth of money that is owed to us. That will be $10,000 that's in my accounts receivable. Now, even though we don't have that money yet, it's considered an asset because it can be, money can be borrowed against it. For instance, if the doctor wanted to get a loan, he or she could use their accounts receivable balance as an asset, and it could be something that money could be, or you could draw a loan against that accounts receivable because it's money that you're going to receive. Most of it you'll receive. Sometimes, people don't pay, but for most part, it's money that's received. It's not the strongest asset like cash. Cash is the best one, of course, but it is an asset nonetheless. Okay? So that's what assets are. The next one is liability. A liability, this is money that your business or the business owes to outside entities. For instance, if you pay rent on your building, that is accounts payable. So another word for liability is accounts payable. And you'll see that abbreviated as AP. I have it up here. Okay? So this could be like if you have a credit line. Let's say I'm getting the doctor, or let's say at your store, and you have a credit line with your supplier. And so you purchase $5,000 worth of supplies, and you purchase it on credit. Then that goes into your accounts payable. This is money that you need to pay. Okay? So it's money that's owed by the business or the entity or firm, whatever it's called, organization, liability. Okay? All right. The next we have owner's equity. Owner's equity. Okay. Now, owner's equity is the net worth of the business. It's also known as the book value. And what it is, it's money, or it's the amount that the company is worth after liability. So, let's say you have $100,000 in assets altogether. Your building, your accounts receivable, and your cash, right? But you owe $50,000 in accounts payable and liability. So how much is your company actually worth? You have $100,000 in assets, but you owe $50,000. So that means your owner's equity, you really only have $50,000. Your net worth or your book value is $50,000. So this is why assets equals liability plus owner's equity. See how that works? Okay. So, down below here on the sheet, you see the equation, just like I did. A equals liability plus owner's equity. Okay. So, assets, 20,000 plus 17,000 in liability. Oh, what's that? Plus equals. Plus 3,000 in owner's equity. So the assets is $20,000. The liability is $17,000. The owner's equity is $3,000. So if you turn this around, you can say of these assets, how much is truly owned by the company is really only $3,000 because they have $17,000 worth of liability. Okay? That's what it's talking about. So it gives you that example down below. So, understanding that, what we're going to do today, we're going to go through some processes. So you should have downloaded the accounting equation sheet. And again, this is an exercise. This is not mandatory for a grade, but I'd like you to do it so that you can learn, right? You want to get out as much of your educational program as possible. If somebody's offering you some exercises, by all means, let's do them so that you can learn. So if you haven't had accounting yet, when you get to it, you'll already be ahead. If you've already had it, then this is going to be review. Okay? Accounting module is mod 110. So I think most of you probably already did have it. Some of you new students have not. All right. So on this accounting equation, what you're going to see here, I'm going to get a little bit close up so you can focus in on the page. You have assets right here. So these are your assets, your cash, your accounts receivable, your equipment, and your supplies. And this shaded area is the total asset. And then over here in between the two dark bars, your liability. And that's accounts payable. Remember, that's the same thing as liability. And then you have capital and revenue. Revenue is money coming in. These together are owner's equity, so total owner's equity. So this is a total of these two numbers here. Just like this right here is a total of these four numbers here. Okay? So what you have, I just showed you the key, so I hope you didn't see that. What you have on yours is some blank areas where you have to figure out how much you put in those blank areas. So the first one is done for you. So let's go over it. The first one has cash at $1,700. See that? 1,000. I can't put a lot of pressure on it. 1,000. $1,700 for cash. We have $300 in accounts receivable. We have $450 under supplies. Oh, under equipment. I have equipment and supplies mixed up. Let me do that. So that's going to end up being supplies. So under equipment, I have $450. And under supplies, I have $1,100. And then so we have all our assets listed here. The total we would want to add up the $1,700 plus the $300 plus the $450 plus the $1,100. Calculator, 1,700 plus 300 plus 450 plus 1,100 equals. And I got 3,550. Okay? So that's what you should have as well, and what's on your sheet. Now, accounts payable, remember, what is accounts payable? Accounts payable is how much is owed. So remember the formula. Assets, which are these, equals liabilities plus owner's equity. So these two numbers here should equal this number right here. Okay? So, liability we have here at $1,897. Okay? Over here, this is owner's equity, the capital and the revenue. Capital is money that the owner puts in out from the outside. So say, for instance, their savings. They saved up $10,000 and they put $10,000 into the company. That is the capital. That belongs to the owner, but they are putting it into the business. Okay? Revenue is money earned by the business. So if you sell 100 necklaces at $100 and you have $10,000, you have 100 times 100 is 10,000. Yes, is $10,000 in revenue. Okay, so capital and revenue together equal your total owner's equity. All right. So here we have capital of $250. That's how much they put in. You know, not every business requires a large amount putting in. And then the revenue of $1,403. Okay, so how do we get our total accounts over our total owner's equity? We add these two together, right? So, 250 plus 1,250 plus 1,403 equals. You should have 1,653. Okay? So now let's check to make sure these numbers are right. And the way we know that these numbers are right is if they fit assets equals liability plus owner's equity. If they fit the equation. Okay? So how do we do that? Well, first of all, we need to look at what is our total asset. Our total asset is this, right? 3,550. 3,550 equals liability. Let me spread these out a little bit. Equals liability plus owner's equity. Liability is 1,897. Okay? And now we go over here to our owner's equity, $1,653, our total. You want the totals. There's only one liability, so we don't have a total liability. So you want to look at your total asset, your liability, and your total owner's equity. Okay, understand? All right. So let's look. Let's see if we balance. 1,653. So assets equals liability plus owner's equity. So flip it around. 1,653 plus 1,897 should equal 3,550. If it doesn't, then I'm going to stop this video, erase it, do it over again, because I wouldn't do that in front of you. All right, so let's see. 1,897 plus 1,653 equals $3,550. So that's how we can tell that we did it correct. Okay? So now let's do one now that has missing information. Okay? All right. Let's go to one that has missing information. All right, so the second one has, under cash, 3,447. 3,447. Okay? Under accounts receivable, it's missing that information. Okay? Under equipment, 782. And under supplies, 744. So therefore, we have, actually I shouldn't have given you that total, but anyway, our total assets is 5,520. Okay. We have liability over here as 4,981. We have capital 427 and 112. So let's do these first. 427, come on, 427 plus 112 equals 539. Total owner's equity. Total liability. So this plus this should equal this, right? But we have a missing number over here. So how do we find this missing number? Well, we know that all of these three should equal this, right? So take that 5,520, start subtracting. Subtract the 744, subtract the 782, and then subtract the 3,447. And I get 547. So check your answer by adding up these all together. You should get 5,520. Okay? So let's say I did, and that's what I got. 547. So how do we check our equation? Assets equals liability plus owner's equity. So owner's equity, 539. Liability, 4,981. Assets, right here, right? 5,520. So this plus this, remember, this plus this should equal that. So let's check our answer. 539 plus 4,981 equals 5,520. Okay? So I'm going to go ahead and let you do a few of these on your own. We will come back and we will do a few with you some more. But I want you to try to do these on your own. Always remembering the accounting equations, assets equals liabilities plus owner's equity. If this does not equal these two, then something's wrong. Something's missing or you added wrong. Okay? So we'll come back tomorrow and I'll do a few more with you. All right. See you next time.